Law firm owners, if you've ever stared at an offer letter thinking, this hire will either save my life or sink my firm, this one's for you. Today's confession is about a firm that hired on feelings instead of math. Two-attorney firm, around $650K a year in revenue. The owner was drowning. Email at midnight, drafting on weekends, telling their spouse, once I hire an associate, it'll calm down. So they did what most owners do. Saw what other firms were paying, picked a number that felt fair, about $120K salary, signed the offer, and hoped the revenue would follow. 6 months later, cash was tighter, owner pay was down, the calendar was still full, just now with training the associate on top. Nothing magical changed because there was no math behind the hire. Here's the simple framework we use to fix it and the one you should use before you hire anyone. Step 1 is know the fully loaded cost. Salary is not the real cost. For an associate at $120K, you need to add payroll taxes and benefits, often 15 to 20%, malpractice insurance, software seats, support staff time, CLE, bar dues, and the list goes on and on. Conservatively, that associate was $150K to $160K a year all in. In business terms, they're a recurring direct cost attached to servicing more cases. Do the math and then write this down. Fully loaded cost of this hire per year equals blank. Step 2 is decide what they must pay for in revenue. People don't cost you money. Untargeted people do. For revenue producing roles like associates, a simple rule. At healthy margins, a hire should be responsible for 2 to 3 times their fully loaded cost in collected revenue. If they cost you $160K, at 2x, they need to be tied to $320K a year in collected work. At 3x, about $480K. That sounds big until you remember, this is not day one. This is once they're ramped up and handling meaningful files. When we did this math with that firm, their associate was only clearly responsible for maybe $150,000 worth of work. At their current pricing and margins, there was a no universe where that hire could make the owner richer. The model was wrong, not the person. Step 3 is set capacity and cash triggers. You don't hire when you're tired. You hire when the numbers hit 2 conditions. 1, capacity. Existing lawyers are consistently at a sane, repeatable upper limit, say 70 to 80% of realistic weekly hours filled with work you actually collect on. Not one crazy month, a consistent trend. And 2, cash. You have at least 1 to 2 months of their fully loaded cost sitting in the bank as a buffer. For $160K a year hire, that's $13 to $27K earmarked, not just floating around. When this firm ran that checklist honestly, the answer was simple. They needed to raise prices and clean up collections first, then hire once their own calendars were full at the new rates and the buffer was in place. Same desire to get relief, completely different timing and outcome. Here's the takeaway. If you can't answer on one page, what does this hire cost all in, what revenue must they own, and what capacity/cash lines must we cross before we say yes, then you're gambling, not hiring. In the Trust in Books checkup, this is one of the things we build with firms. Your real labor costs, your target margins, and a simple hiring rule you can look at before you ever send the offer letter. And now you know what time it is. Mailbag time.
Mailbag.
As always, these are real questions from real law firm owners. Chris, I'm drowning in work and thinking about hiring a full-time associate at around $120K. A colleague told me to stick with contract lawyers and of counsel arrangements instead. Is there a rule of thumb for when to commit to a full-time hire versus staying flexible? Okay, this is a great question. There's actually more to it than just the numbers, but let's talk about the numbers first, okay? Full-time makes sense when, first, your current team is consistently at 70 to 80% plus utilization on work you actually collect on. 2, you can reliably feed the new person 2 to 3 times their cost in revenue at healthy margins. And 3, you have at least 1 to 2 months of their fully loaded cost sitting in cash. Until those are true, you may want to use contract help as a pressure valve. Okay, have defined projects, clear margins, easy to dial those people up or down without getting locked in big fixed costs. However, there is the human side of hiring an associate as well. In my law firm, I own a law firm as well, if you didn't know this, I like to hire associates versus of counsel or versus contract attorneys for a couple of different reasons, assuming the math worked, okay? Here's why. I wanted to have people on my team. I wanted to have people that I could train, that I could sort of enforce the rules on, and that would grow and develop a feeling of camaraderie with the group. I wanted to have consistency. I wanted to have loyalty. I wanted to have buy-in. And so those other factors also, I think, come into play when you're thinking about hiring an associate versus hiring a contract attorney or like an of counsel. I probably pulled the trigger as early as I possibly could. Again, when the math worked, because I was looking forward to having somebody on the team that was going to grow with us, that was going to be consistent, that was going to learn our core values and learn our way of doing things, and then give a better client experience. When you get better reviews, you get more referrals. It becomes this like self-fulfilling prophecy once you hire an associate. So those two things to consider. Make sure the math works though before you just go out hiring people. Next question. My firm did about $550K last year. I know I need help, but I'm only taking home around $80K, and that doesn't feel great for the hours I work. Do I fix my own pay first or still move forward with hiring to get my time back? Okay, this one's pretty simple, pretty straightforward. On $500K, if you're only keeping $80K, that is not good. Okay, you need to fix your pricing, you need to fix your offer, maybe fix your systems to become more efficient, but $80K on a $500K is not going to cut it. You're not going to have any room left over. If you hire somebody, you're not going to have enough room probably to even pay for them, right? That $80K is going to get sucked up right away. So before you hire an associate, look at your P&L, look at your pricing, look at your fixed costs, adjust all those things so you can increase that profit margin, increase your efficiency, then hire an associate when the math is right. Question number 3. When I bring on a new associate or key staff member, should I just pay a straight salary, or do you like some kind of bonus or profit share so they have skin in the game? So the answer to this question for me depends on who you're hiring, what position they're in, what your expectations are of them, and then also what your firm culture is like. So for me, when I'm hiring anybody other than an attorney, I own a law firm as well, by the way, okay? So I own Big Bird Accounting, I own a law firm as well, and we have a team. When I'm hiring anybody other than attorneys, I hire them on a straight salary, okay? I try to make it competitive, so not crazy high, but on the higher end. I want people to stick around. I don't want them to have to worry about like where to eat when they're working. I also don't want them to be sort of negative. I don't want them to be antagonistic about work. I don't want them to dread what they're doing. So I try to pay them well. Then at the end of the year, I may give everybody sort of a performance bonus that's a little bit of a percentage of the profit based on how they do, how they showed up, and that type of stuff. Okay. For my attorneys, it's a little bit different because I have them signing up clients. I have them running their own cases. So what I try to do there is I try to give them a living wage, basically, with a bonus structure tied to what they bring in, what they sign up, but that makes that salary very competitive. Okay. I know how much work I can supply them. I know how much bonus they can earn. And they can do the math as well and see if that falls into the range of money that they want to make. Attorneys sometimes are risk averse. They're not super excited about doing this, but once they get into my program, at least once they get into my firm and they see that I can supply them with the number of clients that I promised, then everything is good. I, again, don't like to tie a lot of stuff to some sort of a random pie in the sky bonus, by the way. I like to have set numbers, specific protocols so that everybody knows what they're doing. It makes them feel more secure. It makes you feel more secure, and it makes everybody perform better. Last question. I know I need admin help before I hire another lawyer, but I'm stuck between a local in-office assistant and a cheaper virtual assistant. How do you think about that trade-off? So again, I have very specific answers here based on what I run with my own firm. Okay. I have my own law firm. I've done this before. What I have done is I separate the rules. I try to figure out what do I need to have in office specifically, and I hire for that. Everything else, I basically hire for on a virtual basis. So in office for me is we have a signing coordinator that does all the signings, handles all the stuff that has to do with that, prepping the docs, doing all that stuff. I then also have an office manager / executive assistant. She does basically everything else with the office, and then also does some things for me that only an in-person sort of employee can facilitate. Everybody else, legal assistants, customer service, paralegals, everybody else is virtual. Here's why. A, it keeps costs much lower. We don't have to have a ton of office space. We don't have to have a ton of new desks and equipment and stuff like that. Also, people that work virtually, for me at least, that are overseas, they're significantly cheaper. Okay, the living wage, what I can pay somebody that's very, very, very competitive overseas would probably not make the cut here. And I'll be quite honest, it's not going to make a lot of you American people happy probably, but I have found that overseas people are significantly more loyal, like they stick around longer, they're least likely to jump, they're often more responsible, like they're on time, they show up, they work hard, they're all very, very smart and trustworthy, at least on my team. And that's how I would think about it. So I'm trying to keep the in-house team or the in-person team extremely small and build around that. So a little bit of personal preference, but you're going to be able to be more profitable, probably get more done if you have a virtual team and only people in-house that you need. Welcome back to Big Bird's Tax Corner, where small law firm owners learn how to legally pay less in taxes and actually keep more of what they earn. Today's topic, the tax piece of hiring. Not the sexy part of hiring, but the part that quietly makes a $60K assistant or a $120K associate way more expensive than the number on the offer letter. Let's use a simple example. Okay, you're thinking about hiring an assistant at $60,000 a year. Most owners stop there. But for tax and cash purposes, the real annual cost looks more like this. Base salary is $60K. Then you've got payroll taxes, your employer payroll taxes, okay, Social Security, Medicare, federal unemployment, state unemployment tax. That's going to be roughly 8 to 10% of their salary, so like 5 to 6K. On top of that, any benefits you may pay for, health stipend, simple retirement match, for example, that could be another 3 to 5K. Then we've got extra software seats, we've got malpractice insurance, we've got office costs tied to your new people, maybe another $1,000 to $2,000 a year. Now your $60K hire is quietly $70 to $75K a year. Why this matters on the tax side. Payroll taxes are not optional, and they are not small. Every employee you add increases your share of payroll tax. That is a real recurring cash cost the firm has to cover before you ever talk about your own raise or profit. These costs reduce your taxable profit, but they still have to be paid in real time. Yes, the extra salary and payroll taxes are deductions. They lower your profit on the P&L and therefore your income tax bill. But you're trading today's cash for future tax savings, just like with any other expense. You don't hire someone for the deduction, ever. Okay? Hiring a $70K employee to save on taxes is like spending $1 to save 30 cents. The only tax smart hire is one where the person helps you generate more clean profit than they cost. So before you sign that offer letter, I want you to answer 3 questions. 1, what is this person's fully loaded annual cost? Okay, salary plus payroll tax plus benefits plus tools. How much additional collected revenue or freed up owner time do they realistically need to create to be worth that number? And after we pay them in their associated taxes, do we still have room for owner pay and profit at the level we want? If we can't do that math, you're not making a hiring decision, you're making a wish. In the Trust and Books Checkup, part of what we build is a simple hiring calculator for your firm. It bakes in salary, payroll taxes, and benefits so you can see before you hire what that person really costs and what they need to bring back to make you richer instead of more stressed. Real quick, if you're a law firm owner doing between $300K and $1 million a year and you're not confident your books and trust account would survive an audit, I'm offering a free Trust and Books checkup for your firm. We'll review your setup, flag any real risks, and outline a cleanup plan. To book yours, go to bigbirdaccountings.com/checkup.